Hello everyone, here are the latest market news on April the 30th, 2019. China April factory growth unexpectedly slows. Factory activity in China expanded for a second straight month in April, but at a much slower pace than expected. An official survey showed on Tuesday, suggesting the economy is still struggling despite strong support measures. However, upbeat data in March had raised hopes among global investors that the world's second-largest economy was getting back on firmer footing. The Manufacturing Purchasing Managers Index (PMI) fell to 50.1 in April from March's reading of 50.5, which was the first expansion in 4 months, data from the Statistics Bureau showed. Shares in much of Asia fell after the data, while the Chinese yuan and the Australian dollar declined. While the official factory survey disappointed on the growth front, it did not show a marked deterioration in business conditions either. Output expanded at a slower but still moderate pace, while growth in new orders eased only slightly. Trump tightens asylum rules, suggesting new fees. President Trump ordered major changes to U.S. asylum policies in a White House memo released Monday night, including measures that would charge fees to those applying for humanitarian refuge in the United States. The order, announced in a presidential memorandum, comes as the president is seeking to mobilize his supports with a focus on illegal immigration ahead of his 2020 re-election campaign. Meanwhile, more than 103,000 migrants crossed the U.S.-Mexico border last month, the highest level in more than a decade. However, their numbers have overwhelmed the government's ability to hold them in custody and quickly process their claims. Karen Sweek, Associate Director of Litigation for the National Immigrant Justice Center, said the court system is not equipped to handle cases as quickly as would be required. She worries that immigrants would not have fair hearings because they wouldn't have time or money to gather evidence, find a lawyer, and support themselves while they await a hearing. Alphabet shares drop after earnings report. Google shares slumped on Monday after the company failed to beat analyst predictions, following a year of internal turmoil, privacy concerns, and several international fines. Stock for Alphabet, Google's parent company, was down 7% in after-hours trading after the company reported first-quarter revenue of $36.34 billion, lower than the $37.33 billion revenue forecast by analysts. The quarter one earnings represent a 17% increase from the same time last year, in which it reported $31.15 billion in revenue. In a call with investors on Monday, Google's CEO Sundar Pichai said the company would continue to invest more in algorithms on YouTube following recent incidents that saw the platform offering misinformation, hate speech, and disturbing content targeting children. He also promised to continue to address user privacy concerns.